welcome to my daily market report. I am Mike, and my market report is about mortgage rates. What drives them on a daily basis here? A lot of factors go into it, from economic reports to headline news, geopolitical, different things like that. So we kind of bring that to your attention on a daily basis to kind of give you a gauge as to if rates are going up or down or sideways, stuff like that. We don't get into rates this specifically, primarily because there's different loan programs out there. There's different variables that go into it, from things such as your credit scores to how much equity you got, if it's a purchase or refinance, like cash out, uh, the property types, stuff like that, occupancies. Those are different things that go into it, and it can very, very much change dramatically on each different one. So there's no one size fits all. So we kind of stay away from that. Just feel free to reach out. I am a little bit about myself. I am a loan officer. I'd be more than happy to talk to you a little bit about what we can do for you if you're looking for rates, or if you're looking to refinance, or looking to buy. If you got questions about mortgage programs or mortgage rates, please feel free to reach out anytime. We'll be more than happy to talk to you and provide whatever guidance we can assist you with. Without further ado, why don't we start this report here, and we'll start off with the economic reports. We got some pretty important reports today. We get, like every Thursday, we get the jobless claims that came in. Last week's report came in at 547,000. However, that was revised higher to 566,000. Now, these reports were pretty good because we were seeing it drip down to, seeing this eventually gauge come down a little bit. The last reports were like 600,000 range or 700,000 range. So now we're starting to get into the 500,000, meaning fewer and fewer people are applying for unemployment for the first time. And forecast for this week was 549,000, so it came in a little bit hotter, but still lower than the revised higher number here. So decent number here. Not going to get disappointed by that. More importantly, we want to look at this continued claims. I didn't highlight it because it's not usually one we kind of look at, but I kind of like looking at as to what we're seeing on this current circumstances with the whole shutdown with the pandemic and everything. So this was revised a little bit lower, the continued claims from last week to 3.6651 million. And now we're seeing at 3.660. So we see actually a little bit more people applying. However, we were lower than the previous one, but due to the revision, we're actually more people are staying on unemployment here. We also got the GDP. This is kind of the big report we've been kind of waiting for this week. Tomorrow will be another big report, which will be probably a very high impact because it concerns everybody, and that is the PCE, which is the personal consumption expenditure. That is the inflation data that the Fed looks at. They look at the core PCE, and we'll bring that to you tomorrow. And a lot of people feel that's going to have a pretty big spike, maybe bring us up to that 2% level that we've been typically seeing, and that might be a pretty big increase. So let's move on to GDP we're talking about. This is for the first quarter. So the fourth quarter ended at 4.3%. Forecast is calling for 6.1% annual for the GDP, and it came at 6.4%. So this will be the initial reading. We'll get our final reading on this in June. So we'll have another reading in May, and then we'll get the final revision for the first quarter in June. And then, of course, July we'll start looking at the second quarter. We also got, lastly, the pending home sales for the month of March. These are going to obviously look pretty disappointing, primarily because we are at historical lows in terms of inventory levels out there. So if we don't have inventory, we got a lot of demand out there, but because we don't have any inventory, these numbers are much lower in comparison. So for the month of February, it dropped 10.6%. However, that was even revised even worse. It dropped down to 11.5%. Now, forecasts come for 5% for month of March, and it came in a bit disappointing at 1.9%. Again, these are historical lows in terms of inventory, so if we don't have homes to sell, of course, these numbers are going to be coming down a bit. We got locally here where I am at, we could easily see 20, 30 offers at any given time. It could see quite a few offers well above the asking price. On average, it could be $75,000 to $100,000 over asking price easily in some of these markets. I've even heard in one circumstance there was an offer $285,000 over asking price. So again, these are pretty crazy times. Not easy for first-time home buyers. There are people flush with cash coming into these, either paying out cash or paying quite a bit of cash, so they can come in with that extra, the bid over asking price. So in any case, let's jump ahead to headline news. Stocks are up. The Nasdaq is going kind of up and down a little bit, and we'll see. I'll show you why. It touches on the yields. They could be kind of yields. Even though we had some good reports, we're getting some great earnings reports. Everybody's pretty much coming. Majority of them are coming in above with higher earnings, or even meeting and they are exceeding like earnings expectations. So we're getting some good reports there. But Nasdaq today was kind of going back and forth, primarily because of the movement of yields, and you'll see why in a moment. As if you recall, last month when yields spiked, Nasdaq kind of also tanked. That's when they were having some troubles. So let's, without further ado, let's start looking at mortgage rates. What's affecting mortgage rates today? So again, like yesterday, we rebounded a bit yesterday. We even touched off our 25-day or our 50-day moving average, moved higher. We started lower again today, and a lot of this has to do with some good economic data out of Europe. So the kind of bond mover and the sentiment for mortgage-backed securities and yields kind of changed. So yields you'll see coming up did spike, as well as the mortgage-backed securities come in much lower. But as the day kind of progressed, we've been kind of slowly kind of working our way back. We just went up 2 basis points. A lot of lenders repriced because they came in with worse pricing earlier on due to the position where we were. However, a lot of them repositioned it, and our pricing should look much like what we closed at yesterday. So this is kind of what we're looking at today. And here's what I was talking about with yields. We started up about the 50-day moving average, and we came back down yesterday. Today we spiked up. We even touched that 1.67 range, and now we're down, still above the 50-day moving average, even though we broke below that and the ceiling, this technical level yesterday. We kind of rose up, so we did spike up. We're now just under 1.65 for the day, and we'll have to see if this can drop a little bit further. But with this rise in yields, this was kind of giving a little bit anxiety to those who are in Nasdaq, primarily because we've got a lot of growth, and it takes away the future valuation of those companies. So their costs obviously increase when they have debt out there, and they increase, and it takes away from the profit levels of those companies. And this is why this makes a big deal in terms of those type of companies. All right, folks. So at this point, you'll see most of the rates unchanged from what we saw yesterday. Again, this is about the level probably just afternoon in New York time. Here on the West Coast, be earlier on, and as after we've seen some price improvements earlier on. So right now we should be approximately a little bit better, about the same as what we saw yesterday. Yesterday's close. All right, folks. Have a great rest of your day. Thanks so much for watching. And of course, again, if you guys got questions about mortgage rates or mortgage products, or need anything in terms of refinance or purchase, please feel free to reach out. I do work with a national lender, and so we can help people in all 50 states. So otherwise, we'll see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.